Hey, and thank you for joining Derek's Mind. It was Derek Invest the other day, but now it's Derek's Mind because I'll switch it up if I wanna. All right. That really is me. I can't help it. I can't help it. Anybody that knows me will tell you. It's how I'm living. So what I want to talk about today is bias in information, and it's unintentional, but it's something I experienced a lot in my 17 years, or 15 to 17 years as a financial advisor and wealth planner. Was bias in information I read, and this came to mind the other day when I was talking with a friend in real estate, and there was also something that I'd read a month or so ago from Goldman Sachs. It was one of their disclosures, and it basically just said, "Hey, look, realize that this research report could be somewhat biased because, or wait, no, scratch that. It said, in this research report, realize that some of these businesses we already do business with, most of these business we want to do business with, and that can unintentionally bias the analysts' opinions." And then it also went on to add that anyone overseas hired as an analyst does not need to follow the rules of the SEC, FINRA, and they are not technically qualified as a financial analyst. So you're just getting information from anyone as long as they're out of the country. It could be anybody. They could hire anybody, right? Now, I'm not saying that's what they're doing. I'm just saying that's a possibility. How many people do you think read that disclosure in the Goldman Sachs research reports? I would say very few. And what that means, and the reason you have to pay attention is they're telling you, they're making you aware that, look, we can hire whoever the heck we want as long as they're not in the U.S. And they'll say what they're supposed to say, or they can. They want to keep their job. Potentially, everybody. It's not a conspiracy theory, but I'm not leaning on them. It just brought up a conversation. It made me think of some things. And so I want to talk to you about them. What are some things you need to look at in specific industries? So as a financial advisor and wealth advisor for 17 years, I did a lot of estate planning as well. What do you utilize in estate planning? Well, insurance primarily. Why do you use insurance in estate planning? Well, because it avoids all taxes at the time of death. So the goal of estate planning is to pass on your money without your heirs having to pay taxes. A very easy way to do that is insurance. If you simply insure the amount of money, let's just say it's on yourself, or the amount of money that taxes are to be paid on your house and you pass to your children, you can easily pass that money to your children. Now, there's a lot of insurance products. Some pay the insurance agents a lot. Some pay the insurance agents less. Okay. Now, one of the products I happened to come across a lot was variable annuities. And basically what they did was they tracked the performance of the market or whatever index they were meant to follow. And there would be like some sort of like living benefit. Hey, you're guaranteed to make this a year. You're guaranteed to make that a year, so on and so forth, based on the living benefit amount, which is not the account value. And most people never understood that. And here was the problem. They were paying like 3.5% to 4% a year for this product. So most of the time, the account value, which was actually their money that they put in, it would go to zero and they'd have this living benefit, right, that would do what it was supposed to do. So if it's guaranteeing 5%, you're getting 5% or whatever it was. But and the guys, they sold them like gangbusters. And in that same insurance world, there were things called indexed annuities. These annuities cost you very little, 0.5%, 35 bips, 0.35%. And they had the same benefits. They had except they didn't cost you 3.5% to 4% a year. But they also didn't pay as well, right? And an annuity, a variable annuity, that agent was getting, I think they were 5.5% and 6% up front. So if you put $1 million in right away, immediately, you would get, $55,000 or $60,000 commission, right? 5.5% to 6% is roughly where they were. Now, that money would be locked up, so they couldn't move that money, that account value, I believe, for it was 3 to 5 years. I have to be honest, I don't remember specifically. Now, an index annuity, and that's going to beat up cash value. If you get into a bad market, folks, your cash value is going to get annihilated very quickly doing that. Now, in an index annuity, if you get into a bad market, your that cash value is still going to get hit because you're following an index, right? Just like in the variable. However, your fees aren't 3.5 to 4%. Your fees are 0.5%. But you have to hold that thing for like 20 years, which means the agent can never resell you anything. That money's tied up for 20 years. And I think in those, it's like the same 6% up front, but there's nothing on the back end. Whereas in variable annuities, almost always, you are making 1% a year. So they make, 55, 60,000, then they get another 1% on that quote unquote million. And so they're making 10,000 a year on that. In the index annuity, they might make that 55, 60,000. They're never making another nickel for 20 years. Now, there's a lot of pros and cons to both of these, but from an outsider's opinion, that's the easy. If you're going to go that route, that is the easiest decision that you'll ever make in the world if you want to go through and figure out what adding 3.5% to your portfolio over 20 years does. You're adding 3.5% because you're not paying it in fees. I don't think that stuff's intentional, and that is what the big firms teach. But there's an example of in insurance, it can all be subconscious. I have to make a living, I do this for them, they do this for me, and all these justifications. But if you're not aware of that bias that in these products, people are paid out differently, and how they're paid out is very different, you need to pay attention. Real estate. What's going on in real estate? Well, right now is a great time to have this conversation. So in real estate, in the last 3 years, started in 2021, we had this giant boom. Real estate went up 35, 40% a year. The value of real estate went up to 35 to 40% a year. And for a real estate agent, this was glorious because they were making 35 to 40% more money. Now, do they want to believe that with the Fed rolling back the stimulus that it put out, 50% more money, currency in circulation, 50% more in 2021, and the Fed has to reel all that back in now? Do they want to believe that prices have to come back from where they took off from? They don't want to believe that. That affects them so negatively that they want to read the research papers from other real estate professionals that want to believe that the housing market's going to be just fine. Everything's okay. We are good to go. Of course they do. It's not a matter of if they want to. Yes, that bias is completely subconscious, and it is very real. Because the real fact of the matter is, not only was 50% more currency pushed into the market, which generated this massive inflation we're dealing with, not only in real estate, but in everything. And I haven't seen it get better at all. And see, I don't have to lie to anybody about anything. My advice is always unbiased because I don't get paid commissions. I don't charge fees on assets. It behooves me just to tell you the truth. That's it. I have no dog in any of these fights. But back to the real estate. So cost of real estate went up 35 to 40%. Here's where we sit. I haven't really seen it drop very much, if at all. Also, interest rates have doubled. The cost per month of buying a home right now, as compared to 1 year ago, is about 35% higher just due to interest rates. If you take it back to 2021, it's about 70% higher per month. If you were paying $2,000 a month, now you're paying $3,400, and you're going to pretend that the real estate market's okay. Go look at the income of the average person. Has it gone up 70% in 3 years? Okay, so there we go. I mean, I don't know how. You don't have to be a math whiz or a real estate expert to know that that's outrageous and ridiculous. There's no way that it can hold on. But if it's not in your best interest to seek this out, you will unintentionally give very bad advice. And here's the thing. This is why I tell everyone, when I'm evaluating any investment, I don't care what investment we're talking about. I always want to prove myself wrong. So if I had the hypothesis real estate is good right now, I would seek out every single thing I could find to prove that it was bad. Because if I do that and I can't find that information and it doesn't exist, I'm as close to bulletproof as I can get. And I will tell you that me personally, when it comes to real estate right now, I have sought out all information to disprove that real estate is in massive trouble. The only thing I've ever found, and it doesn't disprove it, but the only positive piece of evidence that I've ever found is that if you are in real estate right now and you are focused on rent as an income, I can't find a point in history where the cost of rent actually dropped significantly. I can't find a spot like that. So I would say that if someone asked me, well, Derek, where is the glimmer of light in real estate? Well, I suppose if you're like involved in apartment buildings and things like that, and you know you're reliant on rental income, I can't find a place in history where rental income has ever taken a big hit. It seems rent is always pretty darn steady. Maybe a little tiny dip here or there of a couple percent, but not much. So I guess that would be, so if someone asks for my opinion, I tell them that real estate's in huge trouble. Commercial's in the biggest. Retail is also monstrous because there's no demand for either. Why is there no demand? Because no one can afford it. So you can play all the games you want. That's why they're trying to, oh, you could be a fractional owner. You nuts. Got to keep that house of cards going. At some point, it always comes down to what retail us regular people will accept. So everything that occurs is our fault. We just don't like to blame it on us. So if you go out and you're buying fractional real estate, you're part of the reason that home ownership in the U.S. is going to be eliminated. And just so everyone knows, 80% of baby boomers' wealth, 80% came from their homes. So if you eliminate home ownership, you can also wave in poverty. You can wave in far less money, the inability to retire, all these things. Just, now, is there good in that? Yeah, there is. But for now, I'm going to stick with that. Wealth planner. It's in his best interest to come to you and say, I don't do commissions. I am fee-based only. We're on the same side of the table. They all say it. I know. I did it for 17 years. I didn't talk that way, but 99% do. So I'm sure you've heard it. Now, if you've heard that statement, let's add some color, okay? You bring this guy $1 million cash, you slap it down in front of him. He said, hey, 1% a year, we're on the same side of the table. You make money, I make money. You lose money, I lose money. Reality check. We hit a bear market. He has no idea it's coming. That's not his job. Your account falls 35%. You now have $650,000. You have lost $350,000 that probably took you a decade to save or more. He just lost $3,500 a year. Are you on the same side of the table? You fighting the same fight? You're retired. You have no way to make that money up. That's not the same side of the table. So there's going to be bias there in that conversation. It doesn't mean you can't trust someone. It doesn't mean if someone says that, you run out of the room screaming. But realize that there's bias in that conversation because it's inaccurate. It's ridiculous. I would argue that commissions are better. Because if you keep going to someone, you're paying him a commission to buy you something, and every time he buys you something you lose, you're going to quit paying him. You're going to go elsewhere. But these fees are all tucked in so you don't even see them. Heaven forbid you're with a third-party money manager as well, a mutual fund or some outside money manager, because he's hitting you for another 1.5% a year. He's a great guy. He pays my IRA fee. What is that? $35? Who cares? So, point being, you have to realize when you're talking with someone, there's bias in that conversation. Most people that I know go to a wealth advisor or wealth planner because they expect him to outperform an index or outperform what they can do. And here's the truth, he can't. Because he is bound by law to keep you 90% invested. That's why I don't work for those firms any longer. How can you protect someone in a bear market if you have to be 90% invested based on some, 5-tiered system that was created? You tell me. He can't outperform you. Okay, let's run through some quick ones. Day traders, huge failure rate, 50%, 52 to 53% probability of victory on a daily basis. So they lose 47% of the time. They win 53% of the time. They're not going to turn you into millionaires overnight. You can go and prop trade for anybody you want. Likelihood you'll be successful is based on account size, fees, all this stuff that's completely out of your control. Be aware that when you're being, pitch day trading, that there's an immense bias there, because that's a ton of trading activity, which creates a ton of volume in cost to that firm. So whether you're winning or losing, they don't care. They're keeping the spread on every trade you make, and you're making a lot of them. Futures is, they're going to probably pitch you on day trading. You don't have to run it that way. What's the bias in futures? I suppose the leverage, how much money you can make and how quickly you can make it. They don't mention the fact that you lose it just as quickly, and actually far more quickly. Options are such complicated instruments. Unless you are truly a master and professional, I don't know why you would ever touch an option. Right? They have time decay. There's so many different strategies to utilize, when to utilize them. And to be able to even utilize the strategies that someone's teaching you, you have to know the type of market you're in. To even know the type of market you're in, you need to know how to break down individual markets. Are you in a speculative market? Are you in a cyclical bull, a secular bull? Are you in a secular bear and a cyclical bull and a speculative trend following market? If you don't know what that meant, you can't do it. You're going to lose all your money. Is it a great way to make money? Absolutely. For the very few who are already masters of the craft. And like I told you earlier, it took me 10 years to learn what I'm good at. It'll take you 10 years to learn that too, at 60 hours a week. Options are no game, folks. They might be popular because they're fun and they move quick. It takes time. And a lot of time. Crypto right now, whether anyone's telling you or not, is the most manipulated market on the planet. It is the wild, wild west over there, and people are robbed day and night. Period. They're allowed to do whatever they want. You can literally go over there and watch people place $1 million block trades to drive a price in whatever direction that they want. And you watch retail get slaughtered, sell, you watch them buy it right back. It's amazing what you're watching over there. It's just theft. Theft by people who understand the system to people that don't understand the system. And the idea that I'm in this for the long term, it doesn't matter, I'd get over that real fast. A lot of people said that in the 20s too. Ask them how that worked out. Ask China how it's worked out for them in the last 20 years. Ask Japan how it's worked out for them in the last 30 years. Ask Tesla buyers how that's worked out for them. I'm naming you countries, indices, stocks. I can name you commodities if you like. I can name you currencies that never recovered after 20-year bashings. And they probably won't recover. Well, maybe at some point they will. Who the heck knows? That's how the whole system works. In it for the long term is false. Bonds, everybody's going to pitch that bonds are safer. You're retired. You should own bonds. If you own bonds in an inflationary environment, you're insane. I don't care what model they showed you. Well, over 20 years, I can show you 20 years where bonds got torched. Then I can show you the last 20 years where they excelled because we dropped interest rates down to zero and kept them there. The environment you're in dictates what you should be saying. Metals are a safe haven. Metals used to be a safe haven because they were attached to the US dollar. That is why gold recently reached its peak of 1981 at almost $1,900 an ounce. The way gold trades now, you think that's safety? Currencies, commodities. So look, point being, everybody, if you're selling metals, you're going to have a bias towards metals. And you're going to look for the information that suits that bias. what you have to find is someone that will give you unbiased information. You can tune into me and ask me anything you want. It's always unbiased. I have no dog in any fight except for to see you succeed. That's it. I don't make commissions on your money. If you get involved in one of my programs, you follow my newsletter, obviously I get paid from that. But does it matter to me if you're investing in real estate or metals or commodities or stocks or bonds or crypto or some other or cocoa, chocolate? It doesn't matter. Right? So that's the biggest differentiator when you're following someone like me, and when someone like me is educating you and has a real history in this and has a process and a discipline that they will teach you and has no bias towards what he's telling you to purchase or not purchase or get involved in or not stay involved in. He's using fundamental analysis, the mechanics of the market, and me, I focus on the emotional stability of the herd, because they do, after all, decide the direction of the marketplace. That's why in every store you can get gluten-free now. And in 5 years ago, I couldn't go into a Vons and find gluten-free anything. Now everything's gluten-free in there because the market demanded it. Us, the people. So when we demand something, it happens. That means we steer investments, we steer companies, we steer the economy. We are responsible. So I'm going to leave it at that. You want unbiased information? Find someone that doesn't get paid based on the product that he's selling you. And as always, everyone, if you're having a tough day for any reason, remember, this too shall pass. It really will. And it feels like it won't, but it will. Get out in the sun, right? Don't flip me off for saying that because you're frustrated and that's not what you want to hear right now. I get it. I do get it. I've done that plenty. Put a smile on your face, a fake one, until it becomes real. Do whatever you have to do, and remember that tomorrow will be a better day. And always remember that a day above ground is a good day. Thank you, everybody.